Welcome to Chapter 4 of the Clever Framework, where we explore the third essential step, evaluate the source. Information doesn't exist in a vacuum. It comes from someone or something with motives, constraints, limitations, and varying degrees of reliability. Before you verify calculations or examine logic, you must assess who produced the information, why it was created, how it was communicated, and whether it's trustworthy. In this chapter, you'll learn how to distinguish credible sources from promotional ones, how to evaluate AI-generated responses, and how motives and incentives shape financial communication. Let's look at two scenarios. A student asks an AI tool, "Why did cash increase?" The AI confidently explains, "Cash increased because customers paid faster." The explanation sounds plausible, so she includes it in her project. But when the professor asks, "Where did this information come from?" she realizes she never looked at the actual cash flow statement. The AI had simply guessed. Now consider a professional scenario. A team reviews an upbeat press release touting exceptional performance and robust margins. But one senior analyst pauses and asks, "What is the source of this information?" She notices the release came before audits were complete and excludes any mention of cash flow, rising debts, or pending legal issues. Both scenarios reveal the same critical lesson. A statement that looks persuasive may be incomplete, an AI answer that sounds confident may be a hallucination, and a press release may emphasize good news while hiding troubling information. This is why evaluating the source is essential before you trust the content. Understanding where information comes from is key to professional skepticism. Source evaluation matters for three fundamental reasons. First, credibility. Audited financial statements carry vastly different weight than social media posts because they follow strict standards and independent review. Second, context. Understanding who created the information and why shapes your interpretation and helps you recognize bias. And third, risk detection. Selective emphasis, omissions, and AI hallucinations all require scrutiny that begins with evaluating the source. A financial statement audited by an independent CPA provides a different level of reliability than a CEO's social media post or an AI-generated explanation. The source influences not only what is said, but how it's framed and what is left out. When you evaluate a source, you're answering four critical questions. First, what weight should I give this statement? How much credibility should I assign to it? Second, what level of skepticism should I apply? How much questioning is required? Third, what verification is needed? What extent of additional evidence must I gather? And fourth, can I accept this at face value, or does it require deeper investigation? The source determines all of these decisions. Rather than assuming reliability, strong analysis starts with evaluating the source first. This evaluation anchors everything that follows in your analysis. Different types of sources can carry dramatically different levels of credibility. At the low end, social media posts are crafted for attention seeking with minimal verification. AI-generated content is based on patterns and probabilities, not accounting rules. It can sound confident while being completely wrong. Press releases are marketing tools with selective emphasis, highlighting strengths while minimizing weaknesses. Internal communications may reflect organizational pressure or incomplete data. Management statements often involve strategic messaging and pressure to meet expectations. At the high end, audited financial statements follow strict standards with independent review, making them the most reliable source. Understanding the spectrum is crucial. You can't treat a LinkedIn post the same way you treat an audited 10K filing. Each source type requires a different level of skepticism and verification. When evaluating any source, ask two sets of questions. First, assess credibility and transparency. Does the source provide evidence or just conclusions? Are assumptions and methods disclosed? Is the tone neutral or promotional? Does the source have a track record of accuracy? These questions help you determine whether you're looking at verified information or persuasive messaging. Second, consider motives and constraints. Why is this being presented? What does the source gain from influencing interpretation? What pressures shape the message? Could negatives be downplayed? Financial communication often reflects real-world incentives. Management may want to impress investors, interns may fear challenging superiors, and AI may produce confident statements simply because its training optimizes for sounding helpful rather than being correct. Recognizing these incentives helps you interpret statements with appropriate skepticism. The format and timing of information provide critical clues about reliability. Headlines prioritize attention over nuance. Dashboards may simplify data to the point of distortion. AI answers use confident phrasing that hides uncertainty. Polished language can mask fabricated details. Preliminary releases come before audits and may change significantly once scrutiny is applied. In contrast, audited statements represent final verified information that has undergone independent review. Here's the critical point. Information released before audits is inherently less reliable. Timing matters enormously. A preliminary earnings announcement in April may look very different from the audited financial statements filed in May. Format shapes interpretation, and timing determines completeness. Always ask, is this preliminary or final? Is this promotional or verified? The answers will guide your level of trust. Let's analyze an example. A company executive posts on LinkedIn. Thrilled to report a fantastic quarter. We delivered outstanding results, strengthened our financial position, and proved once again why we're a leader in our industry. Sounds impressive, but let's evaluate the source. Who produced this? A company executive with a vested interest in presenting the company positively. What's the format? Social media, designed for visibility and impression building, not verified financial reporting. What evidence is provided? Zero. No revenue data, no expense details, no cash flow data, no comparisons. The verdict? This is a low credibility source for financial assessment. Its purpose is promotional, not informational. While it may signal that the executive is pleased with performance, it cannot serve as a basis for analyzing financial results. A responsible analyst would turn to audited statements, quarterly filings, or the MD&A to gain an accurate picture. The source evaluation reframes your question from did they have a fantastic quarter to where can I find verified evidence to assess their actual performance. Here's another case study. A student asks an AI tool, why did WonderWorks cash increase in 2026? AI responds, WonderWorks increased cash because it generated strong profits and customers paid quickly. This seems reasonable until you evaluate the source. First, recognize that AI has no access to real data. AI generates text based on patterns, not verified financial analysis. It cannot access WonderWorks' actual statement of cash flows. Second, notice the generic explanation. It's a standard narrative without any revenue data, working capital details, or calculations. Third, observe the confident guessing. The polished tone masks the fact that it's fabricating a plausible sounding explanation. The AI is functioning as a text generator, not an accounting authority. Without actual financial evidence, this explanation cannot be valid. The user must check the real statement of cash flows to determine what actually increased cash. Evaluating the source reframes the task from is this information correct to is this source even capable of knowing the answer, and where can I find verified evidence? This protects you from treating confident sounding guesses as established facts. Let's examine one more case study. A company issues a press release. Preliminary results show revenue growth of 22%, improved margins, strong balance sheet. Financial audited results filed in May. This appears more credible than social media, but source evaluation is still essential. First, recognize the timing risk. This is released before the external audit is complete, so figures may change. Second, consider incentive bias. Management shapes market expectations early to influence investor sentiment before analyst meetings. Third, notice the selective framing. It highlights strengths but often omits declining cash flow, rising liabilities, or significant charges. The key point, this requires validation. Although more credible than AI output or social posts, a preliminary earnings release is still not final and potentially incomplete. It provides a starting point, not a definitive source. Analysts should wait for the audited financial statements filed later to form reliable conclusions. Source evaluation helps you avoid treating management's early promotional summary as confirmed financial fact. Let's review 6 common mistakes people make when evaluating sources. First, assuming equal reliability. Press releases are not the same as audited financial statements, and AI is not verified data. Format matters enormously. Second, ignoring motives. Executives, marketers emphasize strengths and minimize risk to influence perception. Third, trusting confidence language. Polished phrasing from AI can hide unsupported claims and hallucinations. Fourth, overlooking AI limitations. AI often cannot access real financials and substitutes incorrect information instead. Fifth, forgetting format context. Headlines and dashboards are not substitutes for full financial statements. Partial information is incomplete information. And sixth, accepting non-answers. Sources may sound relevant, but not actually address the specific question asked. These mistakes lead to misplaced trust and flawed analysis. By consciously avoiding them, you strengthen your ability to distinguish credible information from promotional messaging. Source evaluation is the anchor for everything that follows in your analysis. By understanding the source strengths or weakness, you ground all subsequent work in appropriate levels of trust and skepticism. Professional skepticism means questioning credibility, motives, and format before accepting information at face value. Once you've thoroughly evaluated the source, you're ready for the next step in Clever, verify the results. Remember these key principles. Confidence is not correctness. Polished language doesn't equal accurate information. Evidence beats explanation. Always seek supporting data, not just narrative. And source evaluation protects against misleading narratives, whether they come from promotional materials, AI hallucinations, or incomplete communications. By evaluating the source first, you ensure your analysis is built on a foundation of reliability rather than persuasion. Thanks for viewing this Clever Framework video. This video has been created and narrated by Dr. Wendy Tietz.